Right. South Africa has officially entered a technical recession, and this couldn't have come at a bad time like this one when the country is on junk status. Gross domestic product, GDP, contracted by 0.7% quarter on quarter in the first quarter of 2017. GDP in the fourth quarter of 2016 contracted by 0.3%. This is a shock, as the consensus among economists was a rebound to 0.9% growth. So to unpack this, we are joined in the studio by Maudi Letsoane, who is Managing Director of Lehumo Investments. Good afternoon, and thank you very much for coming.
Thank you for having me.
This must have hurt and shocked most of the people when we heard that we are on a technical recession.
No, it is a surprise, and I think, as you said, the expectation was for a growth of about 0.9, and that has been the consensus. But I think when you look at all the other factors that have happened, we've had the downgrade, but even the downgrade would have come at the end of March, so it's not accounted for in those figures. So that tells you that even going forward, especially for the second quarter, we are certainly still going to see quite a depressed growth, even a negative growth. So officially, we are in a recession, and it's certainly not good news.
But then how did we get this prediction wrong? I mean, for us to say, okay, last week there was rather a reprieve, so to say, when we were not really downgraded, but to get a double B plus, and then a prediction that there's going to be 0.9%, and then the next thing, boom, such a shock.
Look, I think where the market was, especially the reason why it was upbeat, for the first quarter, was the fact that you had a number of things happening, which were quite positive. When you looked at the commodity prices, which had rebounded quite nicely, and that meant that the mining sector would have rebounded quite nicely, and also the agriculture. There is a rebound, even in the current figures that we have. There is certainly a rebound. The fact that we've obviously recovered from the drought that we saw the past couple of years. But that's not enough. And I think it was not enough. And of course, the pressure that we saw in the manufacturing space, those pressure that were not really anticipated. I think when you look at the manufacturing space, it really disappointed. It was one sector that really let down the entire growth. But this, certainly, it's a big concern. But
Yeah, and in the process, I mean, we've been trying to lick our wounds from the cabinet reshuffle events that led to the downgrade. And as a result, we saw the jobs numbers when they came out last week, not really promising for an economy that was supposed to be on an upward trajectory in terms of the country moving on from all the negative attributes. Now at the moment, looking at the rand, the way it has been performing, it's still under 13 rands though. What will the outlook of the currency against other international currencies be?
Look, the currency has appreciated quite a lot, especially for this year. And it has benefited from a number of things, not so much to do with what was happening here at home, but I think a lot to also do with what was happening internationally. When you look at the dollar has been depreciating quite significantly since it became evident that Donald Trump will probably struggle to pass on some of his reforms. So the dollar has been weaker. So you've seen the appreciation in the rand, not so much because of the strength in the actual South African economy, but more to do with the weaknesses on the dollar side. But of course, there's also this positive theme towards emerging markets, which has also benefited the rand, with the fact that the commodity prices have rebounded from last year's levels. That positive sentiment has certainly benefited the likes of the rand. But also, when you also look at the other theme, which is investors seeking yields, and when you look at where the higher yields are being offered in emerging markets, where we go into developed worlds, the yields are certainly still at the depressed level. So the money there's a lot of money, there's a lot of liquidity, but it's looking for those higher yields, and South African bonds are one of the bonds that are offering those high yields. With the reduction in inflation, and also when you look at the inflation numbers is coming off simply because the demand is subdued. It's significantly lower, but that's increasing the real yield in terms of the difference between your inflation and the nominal rate that we currently offer. So hence we've seen the carry trade. We've seen money leave the likes of Japan. We've seen money leave the likes of Europe coming into this country. So not so much that there's anything exciting, but simply because investors are looking for money.
What's going to happen now, because there had been a projection of a 0.8% economic growth outlook, is this event going to quash this estimate, and what's in it for the consumer now?
Yeah, look, it puts a lot of pressure. These figures that we've had certainly puts a lot of pressure on the government to really start working on turning things around. The pressure is already there because we've got rating agencies breathing on their neck, and they've got no options but really to respond positively. We can no longer continue to ignore this phenomenon.
Sorry to interrupt you there, because you have to go now. The response, when you say positively, what do you mean now? When you narrow in to the policies that government has now, and especially the 9-point plan,
yes,
and the industrialist policy and so forth, black industrialist policies.
Yeah, the main thing, and which is what South Africa needs to do, is to bring back the confidence. The confidence at an all-time low. If you ask me, where the investors are confidence, because that's what that person who's sitting outside thinking, should I go to South Africa to go and invest, open that factory to open up job for people? He's probably thinking twice about doing that. The confidence needs to be brought back into this economy. Business needs to have the confidence in the ability of the government to really work hand in hand with business. We need that collaboration between business and government, which was lost when the reshuffle took place. Without that, we are going to sit with the crisis that we currently face for a long time.
So going forward, this quarter and the following quarter and the one after,
yes,
are we still going to be in the same situation?
Second quarter, I expect also further depression, because that's when the downgrades happens, and that's when a lot of confidence was lost. Perhaps depending on what really happens, we could see an improvement going into the third and the fourth quarter.
All right, there you have it. Maudi Letsoane, Managing Director of Lehumo Investments. Thank you very much for making time to talk to us.
Thank you.